Hey, it's Adam Cardinal, Cardinal and Company team at HomeSmart. You're about to watch Next Level Homeownership, sponsored by TMF Mortgage Professionals at Shamrock Home Loans. Great informative series, all about bringing your homeownership to the next level. Enjoy the show. Hey, welcome back to Next Level Homeownership, sponsored by TMF Mortgage Professionals at Shamrock Home Loans. We are going to talk Title I loans with Steven Breault from Home Loan Investment Bank. Hey, thanks for coming out today.
Absolutely.
Really appreciate it. We're finally meeting face to face. We've worked together, done deals together, my own personal deal too, and it's always been email. And you're in Warwick, we're in Warwick. Makes no sense.
Should have gotten lunch.
Yeah, it's taken us quite a while to get together. So this whole next level home ownership stuff, we're talking about renovations and 2 or 3K loans, and the one that I really like, which I used personally, was the Title I loan, where you can buy that home today. It's not perfect, but then you get a separate loan tomorrow to make it what you want. So you can still get the house that needs elbow grease and then get the money to fix it up. So is that a brief synopsis of that Title I loan, or how would you also describe it?
I mean, it's a government-backed loan program. It's backed by HUD and through the FHA. Been around for a very long time. Requires no equity, no appraisal.
Yeah.
Like you said, somebody could buy a house tomorrow, and 9 times out of 10, somebody buys a house.
Yeah.
They want to do something to that house.
Yes.
And there's not a whole lot of options because there's no equity pull to do a home equity line of credit.
Especially if you're buying today in this market.
Oh, absolutely. So this loan here works out perfect because it requires no equity.
That's awesome.
Yeah, and it can also get that loan the next day. You know, you close on that house, I can be getting that loan for that person the next day.
Yeah. So I know in our process, it took about less than 30 days or so.
Yeah, I mean, typically
close.
our turn time, the best case scenario is around 10 days.
Yeah.
You being self-employed gets a little bit more in depth.
I know.
But
I always have to cause a problem.
straight W-2 pay stub, probably 10 days cash in hand.
Yeah, awesome.
So,
yeah, I believe your company had helped one, a friend of mine too. She bought her house. This house was perfect, everything. It didn't have central air, but they're like, what do we do? We're going to buy the house. It's a Title I loan, and they got the Title I loan. They got the central air installed. Perfect. So you're never going to find a perfect home, but you can make it your perfect home. So who's eligible to use to do these Title I loans? Like, what about someone who's going to invest, or a contractor? Maybe he's doing something. What about them?
So yeah, pretty much any homeowner, you can use it for an investment property, secondary homes. So it's a wide range of clients that can use this type of program.
Okay. And can they? Well, so let's say if an investor contractor is going to use a Title I loan, he owns the house, they own the house, and hey, I'm going to buy this one and I'm going to sell it, and I pay off that loan. But now I'm doing another project next year. Can I come and do it again?
Absolutely. So yeah, if you guys wants to flip the house, he flips that house, sells it, just has to sell that house and then pay the loan off as well. Yeah, you can have as many Title I loans as possible for all those different properties.
Yep.
Just can't have more than one on one property.
How do you determine how much the homeowner can actually borrow for the project?
We base it off of the estimate. So that estimate comes in for X amount of money. That's what we're going to fund them. So with this type of a loan, we can lend up to $85,000 for any home improvement, up to $100,000 if they're going to do a garage. So a little different for a garage.
And those line items are important. So if you haven't seen it, look for the video with Carmine DeLuca from Go Fix It in this series. We'll talk about breaking down the line items, breaking everything down. So, hey, we know this is what it's going to cost because you need that information. Yeah. And so are these fixed rates? They fluctuate? What are
they are fixed, and they're based upon their credit score. So the higher the credit score, the better the interest rate. We do have terms of 3 through 20 years, all with no prepayment penalty. Yeah. My best rate, you'd be looking at 5.5 to 8.2, 8.2 being a 20-year option.
Yeah.
So.
And I like that because when we did ours, I knew it was going to be short term, but I didn't want to have a large monthly payment.
Right.
So we stretched our personal one out longer, so I was paying less monthly, but because I knew I was going to pay it off within a year or so, it made more sense.
That's what most people do, and then they have more money. Anything extra above and beyond your minimum goes right towards the principal balance, thus paying it off earlier.
What are the 2 main requirements as far as DTI, credit, all that type of good stuff?
Credit score is a minimum of a 640. We take the mid score of the 3 bureaus that report. The secondary qualification is the debt ratio needs to be below 45% with my loan payment in there.
Okay, so just for the novice, You want to explain what the DTI
Sure. So what we
is?
do is we take your monthly income and then we divide that over your monthly liabilities, such as the mortgage payment, car loans, credit card debt, student loan debt if you had any.
Yeah.
That produces a ratio that needs to be below 45%.
Okay, so if they're bringing in $100 and they're spending 50 of that,
That's a 50% debt ratio.
that's a
right there.
50%
There you
debt
go.
rate. So we got to get that. You got to spend $45 or less
Yes.
in total, including
Yeah.
the Title I loan.
Right.
Anything else of importance to know for Title I, or anything you want to expound upon that you would think that would be important for our viewers to know?
Yeah, I mean, it's a great tool for a lot of real estate agents to have, mortgage brokers, any sort of contractors. Somebody who can't sell a house for a real estate agent, might need a roof. That person comes and gets this roof done, fixes that roof, sells the house, you sell off the loan. It doesn't matter how long you have this loan. You can have it for 3 weeks if you wanted it, but at least it'll sell that house. The flip side of that is you buy that house. Like I said, 9 out of 10 people want something to do with that house, get it fixed up. That's where I come in hand.
Yeah.
Get that loan.
I can't tell you how many times I've seen I'm meeting with a seller, and the seller has the potential to sell their property for here. But because of deferred maintenance and just the age of the property, things that weren't kept up, their value's down here. If they want to put in the time and energy, get that quick loan, it makes sense. You don't take out $10,000 loan to make a $10,000 increase. You take out $10,000 when it's going to make you $50,000 more. And your realtor, hoping it's me, can tell you what to improve, what to do, what to get in that Title I loan to raise your ROI, your return on investments. All right, Steve Breault.
Appreciate it.
Thank you very
Thank you for
much.
having me. Appreciate it.
Home Loan Investment Bank. You're watching Next Level Home Ownership, sponsored by TMF Mortgage Professionals at Shamrock Home Loans. I'm Adam Cardinal, Cardinal & Company team at HomeSmart. See you next time.